Walmart's warning about a pending disaster, and frankly, it's not just Walmart. It's pretty much all major retailers. So what is this disaster? Let's learn more by looking at this report by Global News. And the article is called "A U.S. Port Strike Looms, and It Could Be Devastating for Supply Chains." And remember, it was the supply chain disruptions that led to really the start of inflation. So not only would it be bad for the retailers because they won't have their goods to sell for us, and the fourth quarter of the year tends to be the strongest for retailers. So it's a super important quarter. In fact, a lot of stores rely on the fourth quarter to get through the other 9 months of the year. So let's dive into this report by Global News. And they start off with the International Longshoremen's Association, ILA, which represents about 45,000 dock workers at 36 seaports from Texas to Maine, have threatened to walk off on the job October 1 if they don't reach a new agreement with the United States Maritime Association. And this is a big deal, as they go on to say, a work stoppage at ports could back up cargo for weeks or even months, the expert warns, with implications within the U.S., but then also outside of the U.S. And an East Coast port strike, so it's important to know that this is the East Coast as well as the Gulf of Mexico ports there. An East Coast port strike would be absolutely devastating to our supply chains in North America, said Fraser Johnson, who's a professor at Western University's Ivy Business School, and who's an expert on supply chain management. And the largest port in the U.S. is the Port of New York and New Jersey. I would have kind of guessed that as well. And they ship, believe it or not, $300 billion worth of annuals annually. And they move 7.8 million of those 20-foot containers. That's a lot. And $300 billion, if that gets disrupted, if that gets backed up, if we start seeing ships waiting at anchor a couple, quarter of a mile, half a mile off the shore of New York City, waiting to get into the port. We saw that during COVID. It obviously wasn't good for us. So it's not good. And in fact, the article goes on to say, the analysis predicted a 1-week strike in October would not be cleared until mid-November, which means, the toys and all the stuff we buy at the holiday season at the end of the year would not likely get to the stores in time. And a 2-week strike would mean that ports would not return to normal operations until 2025. And throughout all of this, what the longshoremen are hoping to get is inflation has caused shipping and freight costs to soar since the COVID-19 pandemic, and workers are looking to ensure their wages keep pace. Now, there was a similar strike on the West Coast that was being threatened, and the wage increases by the workers was quite substantial. I think over a period of time, it was almost a 1/3 wage increase for them, but I guess the value of wages and benefits. So this is an important issue, but what does it mean to you and I? First, what does it mean to the economy? And then what should you and I do? So what does it mean to the economy? Obviously, it's not good news, right? We all know that. And it could have ripple-down effects, just like we saw with the supply chain management. So the economy could be hit by this, and I think a lot of companies would blame this strike for any shortfalls in their sales, in their profits, when they report to their investors, the publicly held companies like Walmart, Target, any of the big retailers. This would be one of the things that they would blame if they miss their numbers. Now, right now, the consumer is slowing down. I've shared multiple reports with you that the consumer is slowing down. And that's really been the main focus in these public reports that publicly traded retailers are sharing with everybody. The main theme is the consumer is slowing down. And what we're all worried about is, does that mean a recession is looming? So first, what's the impact on this? And second, would it put us into a recession? It could, right? As fourth quarter is not just a busy time for the retailers, but it's also a great time for workers, particularly seasonal workers that get hired to help out with this rush. So if that rush were to be dampened, it would mean likely fewer seasonal workers. I don't think we would see layoffs of full-time employees because it is a rush, but I don't think we would see that normal uptick in labor that we typically see in the fourth quarter of the year. I live in a ski town. It's a town with about 20,000 full-time residences. And during the holiday period, now again, it's a ski town and it's winter, but we can have 500,000 to 1 million people in our little town. Or I should say get a million skier days in during that. So it's a really busy time, it's a crazy time, and for seasonal workers, it's an important time because everybody is working and there's plenty of overtime to be had for people that have extra time and want to earn extra money. And if something like this were to happen during that key fourth quarter, I do think it could have an impact on the economy. It could have an impact on how much extra money people have in their checks, in their bank accounts to spend on holiday things or to get ahead and start saving. And I think what could happen is a ripple down effect, a delayed impact, where people continue to cut back because the fourth quarter is a time when many of us are replenishing our reserves. So what should we do? You know, if the strike happens, I do think it would have a negative impact on the economy. I do think it would have a negative impact on the consumer. And companies that rely on consumer spending, it just makes sense that that they would likely not do as well on their revenues and profits. And would that have a ripple down impact on their stock prices? It might. And I know it's logical to say, well, Azul, obviously it would have an impact on those companies, the publicly traded companies, the stock market. But maybe not necessarily so. One, this risk is already known, right? So many people are already pricing in the risk of something like this happening. And then as it happens, yes, it's an impact for a quarter, something like this, but is it an impact for 2, 3, 4 quarters? It might be, right? Because this is a time that many of us are replenishing our cash reserves. So it could, but it could also be short-lived, in which case it would already be priced in. And many stock investors, I should mention this is not financial advice, I don't know your situation, but you know, my thought is many stock investors might be looking past this by the time that it happens. So what should we do? In general, for most of us, have a long-term asset allocation. What percent of your portfolios in stocks? What percent of your portfolios in bonds? And make sure that it's not too risky so that if there is a correction, if the stock market does pull back 20, 30, 40%, that it doesn't cause you angst, it doesn't cause you mental pain to the point where you end up blowing out of your stock investments at the absolute worst time. So the time to look at your asset allocation and make sure that your assets are properly allocated, that you have the right mix, that you can withstand something scary happening. The time to do that is when the stock market's at or near all-time highs. The time it's super hard to do that is when your emotions are causing you to be what I call a forced seller in a down market. So this is a time for all of us to take a critical look at our asset allocation, to reach out to professionals to help us with that if that's something that would benefit you. And then, you know, just to remind yourself that stock market fluctuations, the ups and more importantly the downs, is not a bug in the stock market. It's actually a feature. It's what happens. And if you like videos like this, which really my goal here is to help people make good decisions, I think you'll also like this video here where I talk about why waiting to retire until 65 could be a big mistake, why you might want to think about retiring sooner. Thanks for watching this one, and I'll see you in the next one. Bye-bye.